Friday, May 7, 2010, and of course the big thing today is what happened yesterday. What happened on that Thursday? Because the market fell 1,000 points, the Dow in the US, and that was an extraordinary move. Of course, the markets are still volatile and it fell regardless, but I'm going to focus on that dip because everyone is thinking about it and talking about it and commenting on it. And I will try to be a bit speculative. I'll share with you the kind of thoughts that go through my mind on the level of sort of what you can say in a bar at night between friends. So most commenters on the web and in the media are very careful, especially economists are known for being careful, and I guess I should be more careful myself. But after a couple of drinks in the bar between good friends, sometimes even economists can sort of ease up a bit and speculate on what is actually going on, and I'll do that with you. I think the drop was not a coincidence. It was not a mistake by someone who punched in too much high of a cell number in a computer. I think the drop was engineered somehow. I believe that there is a conscience behind it, and someone consciously engineered the drop, made a boatload of money from it, and pulled out. And I even have a theory of who's doing this, and now it gets really speculative. So don't pin me down on this. I'm sharing my thoughts with you over a beer at a bar. And the thing is that what has intrigued me lately is that I've seen these rumors that Goldman Sachs, inside Goldman Sachs, they knew that the SEC was going to go after them. They were tipped off, and of course they know everybody, and people talk to each other. And Manhattan is actually a very small place, so they were tipped off. And what's being said is that Goldman Sachs has been shorting their own stock, making a fortune out of that because they knew the trouble was coming up. And as they've seen that, they've shorted their own stock. They made a lot of money on that. They're pretty confident they will come back. They know how to navigate this and how to get around it. They start to think, well, if this worked, what else can we do? So at least they see that, keep pushing Goldman down will make them another boatload of money. And, in the long term, it won't affect things that much. So let's keep pushing Goldman Sachs stock down in various ways. And there are a number of ways to do that. They can sell their own stock. They can come up with some bad news. They can advise some of their clients to reduce their relative holding of just Goldman. They can borrow Goldman stock and sell it and make money off the options at the same time. There are a number of ways to do that, and they have so much market clout that they're able to move the markets. But then, they think broader about it. What else can we do? Can we short the entire market? Sure we can. And they can. They can short the entire market. Now, when would you do a move like that? If you sit down on a conference table, it could be someone else than Goldman Sachs doing it, but for various reasons I say they're the main suspect. You sit around the conference table and you sort of juggle around some ideas on how to do that. Well, the thing is that you want to make your move at a time of maximum sort of potential uncertainty. You want to trigger uncertainty and volatility and selling at a point where there's, you don't want to do it when the facts are on the table. You want to do it just before the facts are on the table, while people are really skittish and sort of waiting and don't know what's going on. Well, guess what happened yesterday on Thursday afternoon? Two things. You had the riots in Greece and the Greek parliament gathering on whether or not to, approve of the bailout package and what to do with that. and some weird news came out of that as well. And then you had the UK election going on later on in the afternoon, and people were very uncertain about that as well. And of course the Greek situation, you have to count in sort of what the European Central Bank is saying and what Angela Merkel is saying and all that. And that actually reached a moment of peak uncertainty yesterday afternoon, Thursday afternoon. And this was predictable in a couple of days before, so that you could plan for this for a couple of days. It wasn't like it came up just all of a sudden. So someone sat down a couple of days ago, 3 days ago, and said, okay, that's the timing. You know, Thursday afternoon, 2:15 or 2:30 or whatever. That's the point where people are just sitting, watching the markets, don't know what to do, really trigger happy. That's when we can sort of inject a selling pressure, push the markets downwards. And what they do in advance, of course, is that they take short positions, but not only that, they do put options as well. And the trick is to set this to automatic selling when the market reaches a volatility level and falls sort of beyond what's reasonably expected, to get unreasonable returns on the money. And you know, on standard deviation basis, what happened yesterday shouldn't happen, and it should happen in a million years or whatever. It was the second largest move ever. And the thing is that if you can engineer the selling, and you can put stop losses and certain amounts on when you sell, you just, in a very short moment, you just massive selling, and then when it reaches a certain level, it triggers, so you cash in on the profits, and then you leave the table. I mean, they made their money. Maybe they even bought stock, and up it goes again. And then the thing is, if you were someone who were able to engineer something like that, you wouldn't want that to come out, would you? So what kind of explanation, or how would you sort of hide your tracks? Well, you would make sure that it came out some news that someone had done a trade in error. Someone had sold more than they should. People are not quite sure how this happened. This is automatic selling. This is momentum from computer-based selling. Oh, we need more investigations. You might even sort of call for someone to look into that from the SEC or the stock market or whatever, because you don't want to say that it was you. And the thing is that I believe that the probe against the Goldman Sachs is real from the SEC. I believe it's real. They are sort of digging into them, and some dirty laundry is going to come out of that. But the thing is that what they've done is that they've broken a secret, or sacred even, pact between the market, the regulators, and Goldman Sachs by going after them. Because, you know, you don't go after the biggest guy on the block. And the thing is that what I believe has happened is that Goldman is thinking or saying this: okay, we've behaved. We have been nice. We've been letting the markets, you know, play out. We've behaved. We sort of have not rocked the boat. So, you know, we're the biggest guy on the block, and we can move the markets. We can do whatever we like. But we haven't done that. We played nice with you. But when you do this to us, when you come after us, SEC, you know, then we're going to play no more Mr. Nice Guy. It's no more Mr. Nice Guy from here on. And they're sending a very strong signal by doing that. And the thing is that either the SEC going to back down and sort of, okay, you rule, it's your game, you know, and let the alpha males do it, or the Goldman Sachs guys are going to be emboldened by this, and you can expect even more volatile and even more dramatic moves coming forward. And I believe the later. I'm afraid this is just the start of very rocky waters going forward.